We're here to talk today about Brookfield Corporation. After the spin-off of Brookfield Asset Management, we've been reforming the business to take it to the future. We're a global investment firm focused on building long-term wealth. For the past 30 years, we've generated $225 billion for the constituents that we invest money for. That is an 18% annualized compound return for the shareholders of BN over that 30-year period. Taking us to today, we have one of the largest pools of discretionary capital in the world. We have our own perpetual capital base, we have a flexible insurance float, and we have our investment manager. Those three things give us large flexibility to do many things that others can't. We're positioned to be able to compound at 15% returns. Our approach is very simple on how you create long-term wealth. One, invest in good businesses. Two, run them well. Three, allocate the excess cash that's generated wisely. Align everyone with the long-term objectives and evolve with the world that's around us. All this is underpinned by a very conservative balance sheet, and it will always be that way, because strong access to capital is the lifeblood of any company. I haven't been able to say this for 2 years. The tailwinds are turning in our favor because interest rates are coming down. Liquidity is coming back into markets. Transaction activity is starting again, which means that we're going to return capital to our limited partners. Our business, though, has been tremendously resilient over that period. Our expectation is that our annual cash flow will grow by 20% annually on a per-share basis over the next 5 years. We're as excited today as we have been for years, both with the businesses we have, but with the market environment turning in the favor of the businesses that we possess today.
In a volatile market backdrop and really an environment of muted transaction activity, we've continued to focus on operational excellence in driving the earnings growth per share in our business. And over the last 5 years, we've delivered 18% annualized growth in earnings. But we firmly believe the best is yet to come. We are set up to grow our earnings per share at 20% plus over the next 5 years, taking DE, or earnings at the end of the plan period, to $9.77 per share. The main contributors to that growth, Brookfield Asset Management, that's the 17%. But in addition to that, the contribution from carried interest, the growth in Brookfield Wealth Solutions, and the added benefit in earnings growth per share and value creation from that wise allocation of our free cash flow generation. If we're successful in achieving our plans, over the next 5 years, we expect to generate free cash flow of $47 billion, which is the equivalent to $30 per share. In the last 12 months, we met our plan in terms of growing DE per share. Within Brookfield Asset Management, annualized DE grew by 12%. We invested $2 billion into our Wealth Solutions business, into Brookfield Wealth Solutions, driving in a meaningful way that 58% growth in their earnings over the last 12 months. Across asset classes and geographies, we maintained excellent access to capital, executing on $115 billion of highly efficient financings across the organization. And even in a more benign transaction activity market, we still executed on $30 billion of monetizations, realizing carry of almost $500 million. When you add in the contribution of our dividends, we returned over $1.5 billion of capital to shareholders. So rolling forward, our planned value today is $133 billion, or $84 per share. You can see the three pillars of the valuation. Our asset management business is comprised of our ownership of Brookfield Asset Management. Our Wealth Solutions business, in just a few years, has scaled now to $110 billion of insurance assets, with a plan to generate $2 billion of annualized earnings in the short term. And our operating businesses, 4 global champions across renewable power and transition, private equity infrastructure and real estate, at $42 billion. When you layer in the benefits of carried interest and the contribution of capital allocation, that grows to 25% compound annual growth rate over the next 5 years. The corporation continues to drive additional growth through driving synergies in the business and effectively allocating our excess capital. The best is most definitely yet to come.
We try every day to deliver returns for you, and we'll keep doing that. So thank you for all your interest in our business.